Hello and welcome once again to our landlord video updates. I'm Matt Dilks, one of the directors at Christopher Shaw Residential Lettings, and I'm joined again by my colleague James Tiller, a fellow director of the business.
Hi.
There have been a lot of changes to landlord tax over the last few years, some of which have been phased in and some which have been more recent. It's a subject we're often asked about, but this is an area we aren't qualified to give advice on. So with that in mind, we wanted to speak to an expert to help us understand it a little bit more and hopefully help you in turn. So we're delighted to welcome tax expert Ian Sheekey of Total Tax Group, who joins us today. Hello, Ian.
Hi there, nice to meet you.
How are you doing? You okay?
You're not too bad, thank you very much.
Good, good.
Used to being locked down and all this sort of thing.
Well, we were just commenting, unless that sticker's in your dining room, it does look like you're calling from the office.
Well, I felt the need to come into the office and just make sure that it was still here, hadn't burnt down or anything like that, and see what like come in the post.
That's a good start.
Yeah.
So, yeah, we always ask our guests to, at the start of these sessions, to tell us a little bit more about themselves and what they do. So please, you can just give us a basic introduction to introduce yourself.
Yep, so Total Tax Group, we're a firm of chartered accountants, and we also are tax advisors. The business is owned by myself, my business partner, Sophie White. I'm a chartered accountant and she's a tax advisor. Personally, I've been qualified for 30 years as a chartered accountant. I trained in London with the firm there and then moved down here 17 years ago.
Wow.
I now live in Christchurch. And deal with clients right across this sort of area, Dorset, Hampshire, into Wiltshire, that sort of area. Our client base is quite mixed and varied. There's quite a few landlords, but we also deal with individuals with other aspects to the tax returns. Quite a proportion of clients are on sole traders, partnerships, limited companies, that sort of thing. And looking back over my career, property has certainly become, in all aspects of property, has been a significant element of my work, right from well, letting agents themselves doing their accounts, property developers, people that buy property to redevelop or refurbish and then sell on, all kinds of different aspects, and obviously it ends up dealing with tax aspects of that.
Yeah.
So income tax on the profits they make, capital gains if they're selling property, even inheritance tax. There's an issues potentially for later life situation, and more recently stamp duty's got far more complicated, so we have questions around that. And now we get circumstances where a property could be owned within a limited company, so there's something called ATED, which is an additional annual tax that you could pay if you've got a high value property within a limited company.
Fantastic. And how has it been during lockdown? How's it been treating you and your business?
Well, we've been fortunate. We'd planned for this in the sense that we know that we could have remote access to the office. And literally a week before it was announced to go to lockdown, we'd trialed it and sorted out some of the teething troubles. People didn't have webcams at home, or the computer wasn't quite working as quickly as it should have done.
It's now sold out everywhere.
Yeah, so we had all of those issues, but 6 weeks or so now we've been working from remotely. Assisting our clients. Our mobiles have been a meltdown, but apart from that, I think there's lots to do at the moment. There's so many different announcements by the government to help all different sectors of business, and we've just been here to try and help our clients through all of that. And at the same time carry on doing our normal work. We prepare accounts, tax returns, we do payroll for clients, we do bookkeeping for clients. So there's just trying to keep on as normal as well as these unprecedented times.
That's all you can do, I think. I mean, clearly this is a big subject and will be something a lot of landlords will be interested in. Can you talk us through the changes that will affect landlords from this coming tax year, especially with regards to capital gains tax and interest?
Yeah, so there's two significant areas. As you mentioned, the interest has been phased in over a number of years. Since the 6th of April to this year, you now no longer get any relief against your rental income. So when you're calculating your profit and loss on your rental, you can't bring the interest calculator into that.
Yeah.
But you do still get some tax relief on it. So it's not totally phased out. And in fact, if you're a basic rate taxpayer, it makes no difference. All you can get is basic rate tax relief, and it comes through as what they call a tax reducer. So having worked out your income from all sources through the year. You work out the tax liability. Some of that may be a basic rate, some might be higher rate tax. You work out that tax bill, and then you can deduct 20% of the interest as a deduction from that before you calculate the actual amount of tax to pay. So that's quite a significant change, and it was phased in over the last 4 years. In terms of capital gains tax, you now, when you sell, you've got 30 days to notify HMRC of the sale and pay the capital gains tax that would be due on that. One of the things that was announced amongst all the things, the government have said that you don't need to do that currently. Any transactions, and perhaps there aren't that many transactions actually being completed between now and the 30th of June, you've got a little bit longer to actually make that declaration.
Okay.
So Ian, what are the main tax allowable expenses for landlords? You covered previously there was things like interest relief, but things like maintenance, legal costs, that kind of stuff. What are those expenses?
Yeah, so the phrase to bear in mind when you're thinking about the expenditures, first of all, is it wholly and exclusively in relation to the letting business? So is it something that relates directly to the rental income you're getting and the property you have? So for example, when they use people like yourselves, the letting agents fees that they incur, they can be deducted from the rent. Similarly, if they pay utility bills or council tax on the property, that can be deducted. Repairs is another area that can be a little bit more complex, and I think we may well touch on that in a bit more detail a bit later. But if you carry out repairs during the year, you can set those against it. And maybe if you live further away from your property, you're making a specific trip to visit the property to make sure it's okay, you can claim a mileage. 45p a mile is the amount you can claim for that. So it's worth remembering these things. And as well as the sort of things you can claim, just remember to keep records of these things. And it's so easy to get through the year. You're busily doing things and not recording them. So it's important to record it.
Yeah, I think that's probably quite relevant, James, where we use a lot of recording software that we, as an agent, if you're having the managed service with us, generally you will have a date line of everything that we've organised throughout the year. So it's all done for you, really.
Yeah, and then the only other area where you've got what they call domestic items, that's your fridge, your freezers, that sort of thing. If you replace those, you can claim for the cost of the replacement. There needs to be a like-for-like sort of replacement to that, and that kind of replaces. There used to be a wear and tear allowance in years gone by, so that's another area that has changed in recent years. But I think probably people have got used to that idea.
Yeah,
it's been around for a few years now.
Okay. So what about the usual timescale for submitting returns? Obviously, we've just come to the end of the 1920 tax year. When do people start, doing those, and what's the time frame for that?
Yeah, well, we've already filed a few tax returns for clients. So for us, it's trying to encourage our clients to get the information to us. You do have until the 31st of January of next year to file the tax return. That's when you're filing it online. If you're doing it yourself and filing it as a paper return, printing it out and posting it to revenue, you've only got until the 31st of October to do that.
Okay. Is there any benefit from submitting the return early? I guess some people may have taken advantage of being under lockdown of getting there.
Yes, I mean, we've encouraged clients to think about that. So got nothing else to do, so get your tax information together and get it across to us. Certainly the advantage is that when there are queries, some complex areas that need a little bit more thought, we've got that little bit more time to think about it, research it. The client can go and find the information, ask for copy invoices or whatever it may be, if there's things like that. And it's just creating that certainty you have in terms of knowing your tax position. Putting your tax return in early doesn't change the tax payment dates. You always pay tax in January and July, and that's still the case. So the final payment for your tax is the 31st of January next year. But there's nothing to stop you getting the return in sooner. And certainly where there's circumstances where you've had tax deducted through the year, you may be due a refund. So again, get your return in early, you'll get your refund earlier.
Sure.
Yeah, that's great. Leading on to the next bit then, we put out a request to some of our landlords for questions. So you have to forgive me, I'm going to read these out. We've had a few in. I'll start with this one. If you have a mortgage or loan, is the interest charged against your tax?
Yeah, so I think I've answered some of that already, really. But yes, it's the basic calculation is your profit and loss of your business doesn't include the interest, but do calculate it, find out what your interest you've paid, because you get this tax reducer. So it's 20% of the interest will come back to you as a deduction from the tax that's due.
Brilliant. Yes, we've covered that one a couple of times. Next one is going to be, we've had another from someone who's considering taking a hit from the stamp duty cost of selling their rental properties into a limited company. What are the main advantages of this? And is there any guess as to how long it would take to balance the cost of paying the cost of the transfer?
Yeah, so well, the main advantage is that you can get the mortgage interest relieved as an expense in the company.
Yeah.
So that's the most obvious one. But also there's potentially some quite significant differences in the tax rates that you pay on the profits you make. The current rate for corporation tax that the company pays is 19%, where if you're a higher rate taxpayer, you're paying 40, or if you're an additional rate payer, you could even be paying 45% tax. So certainly some saving there, and potentially on the capital gains tax as well. If you sell a property, you could be paying 28% as an individual, but as a company, it's all part of your corporation tax rate. So you're only going to be paying that 19% rate.
Okay. I mean, we were talking about the allowable expenses earlier, and we've had one where someone says they've had quite a lot of major works done at one of their properties this year, and they're now thinking about selling it. They are preparing their accounts for the year ending 1920, and they've asked for clarification on the maintenance and improvement classifications for charging works against rent or capital gains.
Yeah, this is probably the most significant part of the work we do, and you do really need to look at each individual the circumstances around each individual property, or each well, probably even the property. The things I would suggest is that the landlord, well, possibly in this case it's a little bit too late, but if they've got documents looking at what they were planning to do, what they carried out, descriptions of the work, in an ideal world that you have before and after photographs so you can see what the work is. All of this helps us to look at the circumstances as to what the work was done. Because it can, you can get a situation where you have two properties, they have the same type of work carried out, or substantially the same work carried out, and in one case you get it treated as a capital item, and the other they may get a treatment as a repair. So I tend to look at sort of as general guidance, really, it's looking at the work that was done, and was it something that would be the sort of thing that just regularly happens to properties. Decorating, for example, is an obvious of that. Every few years you need to do some decorating. So that sort of heads towards assuming that's going to be something of a repair nature. There is an element there where if it becomes more building work and there's elements of improvement, you could be then saying that it's a capital treatment. So you're demonstrating that you've improved the property. And that's sort of the other aspects of the capital item is generally where you've added something to the property. Because as a landlord, think about. I would suggest you think about what you were intending to do, and was it really because some work needed to be done because it was the roof was leaking or that sort of thing. So you end up putting a new roof on rather than just repairing the roof, and because that may always be a repair because you're actually just replacing a roof that's already there. I mean, there aren't really many properties without a roof on it, is there, after all? And that's the sort of thing to consider. But if you're thinking that you're trying to expand the property, or the master bedroom there's room for an ensuite, well, you've added something to the property. So there's indications that that's going to be more likely to be treated as a capital item.
Okay.
It is down to every case does need to be looked at, and we do that sort of work regularly. It's trying to review it, and with the best thing of all is to try and if the landlord is trying to do something like that, is have that conversation with us or their own accountant, and explain what they're trying to do and try and get some guidance as to how it might be treated so you've got that forethought and can expect the implications of it.
No, absolutely, and I'm sure there's probably, like you say, quite a lot of people in that position and in the last position as well, particularly with view of some of these changes that are going on at the moment. So that's really useful advice for people, I think. But another one we've had, Ian, someone says that they've got 3 tenants, 2 are on benefits and 1 is working. The landlord pays all their bills, so do they have to pay full council tax? I'm assuming that might be something that is allowable.
Yeah, so where the landlord is paying that cost, I couldn't comment on what level of council tax they may be paying. That would be something that they would need to, the local authority would give probably guidance on that. But certainly if it's something that you've incurred because you have those tenants in that property, yes, it would be something that you could deduct against the rent that you receive from them.
And then finally, and apologies for the long questions. Your questions have been longer than anyone else's, but of course it's a very complex topic. We're going to bring on to the last one here for you. So the question which relates to self-employment income support scheme, bit of a tongue twister. As a small landlord who meets the eligibility clauses of the scheme, i.e. not a firm or limited company, I understand the tax office normally class rental income as unearned income. Therefore, will we be able to claim back any unpaid rents once it's operational?
Right. Yes, so this self-employment income support scheme, it's been announced, but there's still some details to follow as to how the scheme will actually work. But as the name suggests, it's where you are self-employed and you have, and that's earned income. And as you correctly said, the rents that people receive is deemed to be unearned income for that calculation. So to claim under the scheme in the first place, you've got to have at least 50% of your total income in the last tax year, completed the 18-19 year, that is. You need to have 50% of your income coming from earned sources, your self-employment income, and then you're entitled to relief. There's some other rules around it. If the average of the last 3 years may be applicable to them instead of just that 1 year. But unfortunately, yeah, the landlords for their rental income and whether they're able to claim any rents, unfortunately, there's nothing in place for that. I know it's something that has been mentioned along with certain other industries. There's been so many schemes and suggestions out there of how to help businesses, and the government have made huge steps towards supporting so many different sections of the business. But it does seem like landlords is one area where there isn't a great deal of help at the moment. And given the pace of and number of different schemes that have been announced over the last few weeks, even we may find that there could be something in the pipeline that they will come and help, particularly if it becomes an issue where more and more tenants aren't paying their rent. I mean, you'd hope that if the tenants are people that are employed and they've been furloughed under the job retention scheme, they're getting 80% of their salaries. So hopefully they've got the money to pay the rent, and hopefully it won't become too much of an issue for the landlords in the first instance.
Yeah, absolutely. I mean, yeah, it's tax in itself is very complicated. Add this extra complex layer of what's going on at the moment, and it becomes a potential minefield. I think landlords definitely feel the last few years have impacted them quite directly. But I guess that's, probably more reason to have someone who is extremely experienced like yourself to, make sure they're not missing out on any potential kind of relief that they're due.
Exactly. And obviously people like yourselves who can guide them through the whole complexity of actually just letting a property out these days. A lot of people started off as thought they could manage it themselves and were doing it themselves, and realize there's so many different complications now with the rent deposits and all sorts of things that just layer so many different complications to it all.
And it moves so fast as well. It's even hard enough for a company to keep up with it. So if you're an individual who's still working a normal job and a 9 to 5 and managing your own property and doing your own taxes, there is potential there for definitely some banana skins and some big repercussions if you get stuff wrong.
Yeah, I mean, we found that lots of people kind of unexpectedly become landlords. They've inherited property because their parents have passed away, or they've I've had situations where clients have bought property when their children are at university, just so they know they don't have to worry about the property their children are renting whilst they're at university, and then children move on, they graduate, and they carry on letting it out. So, you know, they don't necessarily plan to become landlords, but once they're there, then they need the support around them to help make sure it works properly for them.
Yeah, absolutely. It's definitely not a casual profession anymore. As I say, a lot of areas which you can come unstuck on. So yeah, thank you so much for coming on, Ian. What we'll do is where we put these videos out, we will put your details below.
Okay.
So apologies if we put some more work on your shoulders, but if anyone needs to reach out,
no, we're very happy to talk to anybody if they've got any questions. Certainly, as an initial conversation, we can point them in the right direction. And if it's a bit more complex, they may need to have a meeting, and then we can talk about the cost involved in providing that advice. But simple phone calls, certainly we can do that, no problem at all.
That's really helpful. I'm sure a lot of our landlords will probably take you up on that. But again, we really appreciate your time. I know you've got a busy time of year, and we'll let you get back to it. And hopefully we'll catch up again soon.
Lovely. Thank you very much.
Ian.
Thanks so much,
Thank you for
Ian.
inviting me.
Bye bye.
Okay, bye.